There's still a lot of questions about how the one big beautiful bill will impact the economy and taxes moving forward. But here are three things that you should keep in mind as a business owner or taxpayer. First, the QBI deduction is here to stay. This is a huge benefit for almost every business owner and important for ongoing planning of your income and taxes. The QBI essentially cuts the income that you report by 20%, so it's huge for the self-employed. Other parts of the bill that could hurt self-employed owners, like pullback and subsidies to the ACA plans, but at least for having that 20% cut, that's here to stay. Social Security can still be taxed. Despite what leaders may be saying, it's not a cut to Social Security that occurred in the tax bill. Instead, what it does is increase the deduction for those 65 plus by $6,000. This requires significant planning, especially if you're thinking of doing Roth conversions, because that could move you into a higher tax bracket that would reduce the standard deduction increase for 65 plus and push you into a higher tax bracket. Third, there's going to be all new types of tax torpedoes that essentially kick in, increasing your taxes significantly depending on where you are and what bracket you are and how much income you make. The perfect example of that is in the increase in the SALT deduction, which is for state and local taxes. That increased to $40,000, up from $10,000 in the previous tax bill. But what can happen is if you make a certain amount, then your deduction drops back down to $10,000. So if you can imagine that deduction of $30,000 can have a big impact, especially when you're making a certain level of income that would result in that downward deduction from 40 to 10,000.